Everybody, welcome back to the One Step Better Business podcast with Mike and Matt. Matthew, how's it going, man?
What's up, man? Welcome back.
Doing well?
Doing great.
Excellent. Today, we're going to talk about something that we see a variety of new clients come in that always have questions, specifically for restaurant operators, franchises, anyone that really is thinking about having multiple locations in their organization. And that is what we call employee only entities. So oftentimes, for every location I have, I'm going to set up its own entity. And within those entities, I'm going to pay payroll and keep everybody in there. And so there's a different way that you could think about this stuff. And so we're going to talk about that today, hopefully, solve some complexity and make things a little bit simpler. But before we get too far into that, Matt, I got to ask you, this is really important how I phrase this question. So I need you to listen closely.
Okay.
Would you rather fight 100 duck-sized horses
Be very
Or-
clear with that D there, Mike.
or one horse-sized duck?
100 duck size.
Yeah, it's not meant to be like a riddle. Think about a miniature horse or a really large duck,
About 100 of them.
but 100 small horses.
Oh. One, whatever the one is.
Really?
Yeah, I think I can take a small little horse.
It's not a small horse.
Oh,
It is
it's
a
big
duck the
that's a
size
giant-
of a horse.
Oh, I want to kill the 100. I want
You wanna-
to
you-
fight the 100
Little horses.
little horses. or
Duck-sized horses. Yeah. It took me a while to
I'm
pick up on that.
Sorry, I lost.
Mason
Yeah.
asked me that question, and it's like I immediately thought
I'm
of
an idiot.
100 horse like ducks that are the size of a horse.
Yeah.
It's like, no, I wouldn't want to do that, but it's different. So
I would, yeah, the one.
I want the small
100,
things.
the smallest thing. I think I can take 100 small
You
horses.
can just kick them.
Yeah, I think I could take them. And, you have to isolate. They're ducks, right? This I could take that. Yeah.
I think about a duck the size of a horse, and that's pretty creepy.
Yeah.
I would not want to approach that thing at all. There is no good
They
transition.
have no teeth.
Yeah, but they have a giant beak.
Yeah. I don't know. I think. Ooh. I think I take the one giant horse.
Oh my goodness.
One giant duck. Excuse me. Yeah.
You got no chance of taking a giant duck.
I probably lose to either one. All right. Good luck transitioning this one, Mike.
Yeah, there's no good
You have a
transition.
multi-duck entity.
Yeah, if you have multiple ducks in one entity that is the size of a horse,
Yeah.
then what does it look like?
Yeah.
No. All right. So it's not uncommon for us to get a client that has multiple locations, whether it's a retail shop, a restaurant, any kind of business. And one of the things that is coming up at some point is by having multiple entities that you're kind of operating within, there's complexity around shared expenses, shared employees, things that, if I'm purchasing something on a credit card that applies to each of the locations separately, allocating all that stuff. And that's normal accounting and payroll issues that we
For sure.
run into. But there's also different ways to handle this. Talk to me a little bit about when we talk about an employee only entity, what are we really getting at?
Well, first things I always think of are you're going to have duplication of effort. So it's just the simplest thing you're going to have to do when you have multiple locations and it's multiple entities is you're going to have certain requirements. You have to file payroll tax returns and unemployment returns and W-2s, insurance policies, all the different things. You've now duplicated the complexity just off the bat. And so when I think about the reasoning for a little cleaner structure, my first layer I'm trying to do is let's just reduce some of the basic compliance stuff. Why would we do two of everything when we in theory could do one? A lot of the questions we get around this are, I want to make sure the expense is in the right location. Yeah. We're going to handle that through segmenting the employees within that entity by a department or a location or an org value in our language, so that we can account for those things in the right buckets. But the reality of it is I want to just simplify the reporting. Like that's number one. Um, the second reason why I'm worried about this is there is some compliance risk that you're going to run into when you have multiple locations, particularly if the locations are near each other. More than likely, you're going to have an employee that's going to work in one location and the other. You're going to have a person that moves partway through the year from one location to the other. Well, all those things are going to cost you extra money that you may not be aware of. And so we talk through that layers. The first one is state unemployment. Most states have a limit on the amount of wages that are subject to unemployment tax. That's somewhere between $7,000 and $13,000, I think, is the overall. Maybe it's a little higher in a couple states now, but I think it's $7,000 and $13,000. So the first $7,000 to $13,000, depending on what state you're in, that you pay for wages is subject to unemployment tax, state unemployment tax, and after that it stops. Well, if you paid somebody $7,000 at one location and you moved them to the other location, you're going to pay the same tax on that other $7,000 again. Just a waste of money. Same thing with FICA limits. So if you have let's say you have a salaried manager making $150,000, well, you only pay Social Security up into a limit. I think it's 156 this year. I think is the limit now. But after that, you don't have to pay Social Security anymore. Well, let's say you paid them for 10 months and they were making $200,000. Let's say it was a really highly compensated employee, and you move them to another entity, you're going to start that whole thing again. So you're going to pay 6.2% on those wages that you have over $156,000. It's a waste of money. And so part of that is that risk. The third bigger one, though, is overtime. So you have an employee that works 30 hours in one location, picks up a couple shifts in the other one, and works 20 hours in the other one. It's very easy to miss that they actually should have been paid overtime on that extra 10 hours of time. But when they're in reporting in one entity, it's a lot easier to see that, because you're going to see it in the same, that the employee is one employee. You may have two locations, but you'll see that it's 50 hours. You have to pay them overtime. So that's a compliance issue. And so under state unemployment, state labor audit, it's going to get popped pretty quickly. They're going to see that, hey, you're paying the same person on average. And so overtime is the third really risk factor we see. Those are the ones I really think of right away, that just there's wasted money and a compliance risk that I'm not going to do things right. From a accounting standpoint, this is very easy structure to implement. Your insurance policies, your retirement policies, all this stuff's going to go into where the actual employee is residing. And so it just keeps things a lot cleaner. It's easy I add a location. I never added that entity to my 401k plan. I get to the end of the year, my plan hasn't been amended. I have to do an amendment to add that new location or new entity. Same thing with my workers' comp insurance, all that stuff. I want to make sure that the entire shell is always protected. And so having those employees there is a super easy and efficient way to do that. In our state here and in most states, you can do that pretty simply just by setting up a limited liability company, having it owned by a parent. So it'd be your holding company or another entity in your organization. And an LLC with only one member, which this would be because it's owned by one of your other entities only, is going to be disregarded for tax purposes. So it doesn't have a federal income tax filing. Depending on the state you're in, it may have a state tax filing. That's very, very simple filing usually, because the only thing in there is labor. And so you don't have any assets in there. You don't have any net worth issues or anything causing any kind of extra tax for those people. And you only have as an expense. So you're going to be able to take that expense on the parent anyway. So you're not losing anything there. So just some of the simplification that I want to do with those entities. There are some states where an LLC, you may be an S corp, you still can have this single member LLC as a wholly owned subsidiary of that S corp. So it just creates a very simple structure for most businesses. It's kind of where I start.
When you talk about that and you start to talk through kind of the advantages, my thoughts immediately go to any one of those is not worth the trouble.
Correct.
And this is it's normal, especially in small business world, to say, that benefit isn't really
It's not worth that much.
It's not really worth the trouble. But when you start to stack them all up together is when this really starts to make sense. Because if I'm not trying to, I'm going to save some pennies on my SUTA filings, or I'm going to save a couple of dollars on my unemployment stuff, right? My federal stuff. Who really cares? But when you start to put that together with FICA limits, with ease of use in your accounting systems, with simplifying your workers' comp stuff and the plan amendment stuff, and then the overtime tracking, like all together, this does start to solve a really small problem. And a lot of small business owners are hesitant to jump in to make changes unless there's really pain or problems that are getting fixed. And so I think it's interesting. You mentioned the overtime one. That is probably one of the bigger risk areas that we see in small businesses that have multiple locations that do multiple entities. That can be real dollars really quick because under audit, that is immediately going to stand out as a red flag. And not only just the penalties associated with it, the process of going through that and collecting all the paperwork and giving it to the auditor, all that stuff, it's just unnecessary.
Yeah, I mean, that probably won't save you money either. Like realistically, if you missed it and you were never audited, sure, it probably was fine that you weren't paying overtime until it is. The compliance factor alone too. So we have a client that has 7 locations. That's 7 W-2s that you have to get issued. There's 7 941s, 7 unemployment returns. You're going to have employees that worked in 3 locations. They're going to get 3 W-2s from you. It's just redundant for no purpose. And so like, I look at that as just, this is an easy simplification. Yeah. And you know what also it does? It allows you to only have to go to one place to enter your payroll. Like there's some just practical time saving events there. And even if you have tracking time at 7 different places, you're going to be able to accumulate that information into one spot. All your employee records are in the same location. Say you have somebody that's been with you for a while. I mean, most likely they're going to hop from location to location from time to time. It just creates a very simple and easy way of going about doing these things. And at the end of the day, simple is going to make your life easier in the long run.
Yeah. Yeah. I know we have clients that do it both ways.
Yep.
We have some clients that have jumped through the process of putting all their employees into one entity. All payroll stuff happens out of there. We have some clients that want to keep it separate. Ultimately, you got to decide what's going to be best for you, because I have seen some valid reasons why I need employees in separate entities, mainly around like home care stuff where licensing is involved, and in each location or each state kind of has to have its own license, and the employees have to be like, and so like there's some legit reasons for that. But the companies that consolidate into one of their biggest fears is I'm going to lose the ability to track all the stuff to each of my locations. How do we get around that?
Yeah. So on the payroll setup and within the accounting, we're going to set up an organizational value for the location or the entity or the department, depending on, how we need to break that down. But let's just say it's location for now. So we're going to have an order value for, let's say it's locations 1, 2, and 3. If we have 3 locations, we'll know which employee that employee is defaulting to. And then when they clock in and clock out time, they're going to default to that location. If they go to the other location to work, they're going to pick that location that they're working in. And that's going to allow us to get reporting on a per location basis. And we'll be able to make sure your accounting is straight that way. All the costs are being allocated to the appropriate location. And that's just the simple accounting at that point. We have we'll set the GL up, the general ledger up, so that the employees are mapped to the right location, and then we'll have a report that we can get right into the books. And so that should be a pretty simple process once you get them set up.
Yeah. One of the really kind of small detail things that we run into with this is that's true for my hourly employees. They can punch into whatever location, but I also have a handful of office staff or administrative team that they're not punching in. Maybe they're salaried employees. How do we, break out that labor is a big concern.
Yep.
And I oftentimes see that as, well, we have to fix that in our books. And anytime you're thinking I have to fix this in my financial statements, in my books, you've missed the preceding. This is actually a payroll issue.
Yep.
A lot of times, and
So
because
yeah, salaried employee, are they working in multiple locations? Do you know how much time they are allocated? So we had a doctor's office that had a floating nurse that was she worked at one location on 2 days a week, and another location 1 day a week, and then another location 3 days a week. So she worked 6 days a week, and we had to find out what the rules were. And we can set that up in payroll.
yep,
We can have a fixed allocation of she is automatically split the moment she gets paid. We're going to know exactly what the allocation is. That hits our report the same as one hourly employee. If she changes though, in that week she worked all days in one location, if you just notated that, the system you can override that so that it can be allocated to the right location. That's all payroll driven though. Like you said, the allocation rules for, hey, this employee is really 50-50 all the time between these two locations. Great. That's an easy one-time setup, and we'll not have to think about it again. And the accounting is going to be easily done. She only gets one W-2 at the end of the year. It's simple. It's simple.
yep.
Yeah.
Yeah, I prefer keeping everything together.
Yeah.
Personally, it makes things so much easier because it is. It's again, none of these all these issues I can overcome with like, hey, I'm going to spend 3 minutes and I can get it knocked out, or 5 minutes over here, I'll get that knocked out. But when you start to stack up those 5 and 3 minute things, it really does turn into real time. And for me, the simplicity of avoiding those 3 and 5 minute conversations or reporting fixes or integrating different systems, all that kind of stuff is the stuff that's like, man, it's just not worth my brain power.
Yeah. And we do this internally. So we have multiple brands. We have our accounting brand, our payroll, and our insurance. And we have employees that are allocated to each of those brands. So those are two different entities. We also have people that are allocated between the two, like, so they're split. So we have, hey, this person works about 25% on this entity versus this one. We're going to allocate that, and we have that set up to run automatically. The ease by which that allows my accounting to happen, and we review it from time to time if the allocation needs to change. But for the most part, it just creates a very simple way for us to make sure that the expense is being recognized in the right bucket, and it makes it easy for our employees. So we don't have to worry about, well, we have this new entity, make sure we add them to our 401k plan. We have a new entity, make sure we add them to our workers' comp plan. Just creates a lot of simplicity. All of our employees are sitting in one entity in our world.
Yeah. And whenever we have those multiple entities, multiple employees in multiple entities, another thing that happens is the sharing of employees is because a lot of times it's, well, if I have everything broken out and Mike Schaefer is working at location A and location B, it's easy to know because he's going to punch in here, punch in there, whatever. And that's true. But the thing that often gets missed is you also have to hire me into both locations, which means from a compliance standpoint, I have paperwork that I have to have.
I mean,
for
I-9
each
for
of
both
those
locations. I have a W-4 for both
that
locations.
stuff starts to get complicated. Not only that, at the end of the year, I'm going to get multiple W-2s from what I believe is my one employer, because I don't have any clue as an employee how we're structured, or why this is happening. So you're going to get questions around that. There's always going to be something that pops up of, well, I have insurance, and this is something that we had another company have. They offer group health plans. All of the entities are under one plan, which is fine. But then it's like, well, I have somebody working in multiple locations, so they're set up in multiple entities. Where do the deductions come from?
Yep.
So now I have to update deductions because I want them easily out. And it's like, what are we doing?
Yeah,
what are we doing?
It's not really hard. Well, hey, let's also, I mean, you could have a garnishment. Well, okay, am I garnishing both wages? Am I garnishing one wage? So that, like, this creates just a lot of simplified reporting management. You have to offboard that person. What about Cobra? All those different things. Like, does this employee have 25 employees? This employee has 100. Do you have different requirements? There's just, you have ACA issues that are, you have to look at that stuff as a whole anyway. So, like, are you tracking your actual numbers based on the whole group or just one of those entities? Like, you're creating complexities for no reason.
Yeah, you lose out on a lot of consolidated reporting. Now, let's pretend like, hey, you're listening to this. That makes sense. I have multiple entities, employees everywhere. What are some of the practical things I need to think about to walk through making a change or fixing this?
Oh, first one I think of is when. It's the middle of the year right now. You probably have already had some issues with employees jumping around at this point. I probably wouldn't do this in the middle of a year. I'd probably start this at the beginning of a year, just to make it nice and easy and clean. Could it be done? Sure. You probably lose a lot of your first time advantages for doing this. You really wouldn't get much benefit till year two. It does make some of your simplification happen right away easier, but you're not going to get any dollar savings probably right now for that. Um, so my first one is timing. The second one is you want to get an attorney involved. This is another entity you have to set up. Um, which state are you setting that up in? So, is this going to be a Delaware entity? Is this a Nevada entity? Is this in your home state? What's the cost associated with that annually? So like in Tennessee, our annual cost for just maintaining an LLC is $300. So that's going to eat into some of your advantage to having the entity. That's understandable. There's some compliance of registration of getting your registration for your franchise and excise tax in Tennessee. And so making sure that you're getting all the things checked to get this established is the first one. And then you need to probably notify your employee of the changes that are going to come. You're going to have to re-onboard most of your employees. And that doesn't necessarily have to be a hard re-onboard. It could just be all right, I need to make sure I get the W-4s and I-9s for the new entity set up. I've got to make sure that I notified all my insurance carrier of my new entity. I got to notify my workers' comp plan, my 401k provider of the new stuff. That's a one-time thing though, but there are some steps there involved in getting that entity established the right way.
Yeah. Administrative. I mean, you're talking $300 a year.
Correct.
For, fees of, with the state.
Yeah.
That's
not a lot of money.
Nickels. Yeah.
And this is, and actually Tennessee is one of the most expensive. So it depends on where you're located. You can get, it's $50 in Wyoming and Nevada. Typically you're going to want to register that in your home state as well though. So you're going to probably want to do this in your home state.
Yeah. Yeah. All right. Once that gets set up, you mentioned earlier, I now have complexity because I have a new entity, but there's some ways to structure that to where, I'm not necessarily going to file a tax return for my new employee. Yeah. Talk a little bit about some of the ongoing maintenance stuff that comes with this.
Yeah. I mean, the first one, just anytime you have an entity, it's doing your annual report filing so that you maintain the active status of that entity. You're going to make sure this is owned by a wholly owned parent. So, if let's say you are a restaurant, you're probably going to want to establish, in our case, we talk about a total restructuring of, okay, you have 3 locations, they're all separate entities, and now you have this employee entity. I'm probably going to create a parent entity above all those things and just be a holding either LLC or S Corp, depending on how you're structured. And then I would reorganize my other entities. So my 3 location restaurants, I would make those now wholly owned by the parent. So now I have one federal filing. There's just some simplicity I'm going to do as a whole as part of this restructuring. But as long as this employee entity is a wholly owned sub, which means it's 100% owned by a parent company, this is going to be disregarded, which means you're not going to have any federal tax filings. Some states require a filing, some states don't. But for the most part, you're not going to have any income tax filing because of that.
That makes things easier.
Yep.
I want to file as few returns as possible.
Yeah, absolutely.
Any last thoughts as we wrap up?
Obviously this is something you're going to want to run by attorney. We're not attorneys. We are an accountant. We're taking this from the accounting perspective and the costs associated with the tax filings. Your particular situation may not allow this to be an easy thing. If you're a franchise, a lot of times the franchise won't allow you to do this. We've run into that a couple of times, but the franchise is like, nope, all employees have to live in the employee they're in and the entity they're in. There's some liability risk anytime you're talking about employees and them working multiple locations. You're adding complexity and liability at no matter where those employees are working. You could have issues. So, like I said, run this by your attorney, and then think through this in the long run. It's not a short term fix. It's not going to happen tomorrow. So it's going to take a little time to do it. So it's middle of summer now. I would highly recommend you if you're doing this to get it started now so you can be ready to go for the first year.
Yeah, good stuff. You guys have questions about what we're talking about or want some more information? We have a whole article written. It goes into pretty good detail about what we call employee only entities. It's on our website. I would encourage you to take a look at that. We'll post that in show notes. And then also make sure that you click subscribe so that way you get some more information about this kind of stuff and other related topics. Thanks, everybody. Have a great day.